It is a very exciting seminar that will where we'll talk about the next generation of payments and how this digital Europe basically can change the way that we do transactions and we handle our currencies. It will mean a big change in how we do things, but also there are great opportunities. But how do we balance, the change from one to the other? This is exactly what we'll talk about in this digital deep dive today. Let me change to the next slide and welcome everybody who has joined in to discuss this very important topic. First of all, we have Florian Dennis, the member of the Commission's McGuinness Cabinet from the European Commission, and a very good specialist, I would say, to tell us what are the next steps and how does it actually look, this implementation of the euro. Well, then, of course, we have Oyefe, who is the Vice President of Government Affairs from Visa. Visa, a major stakeholder in how we basically implement this, and of course, a major stakeholder in how transactions are done today. We have Kevin, the head of digital banking and financial service from Bitkom, the German association representing many of the digital stakeholders in Germany, but also, of course, of the financial services sector. We're looking forward to also hear the German view on how this looks. And not least, Fanny, who is the Director of Digital and Retail Regulation on Transparency and Implementation of Management. It's a very, very long title. From CaixaBank, we work together and we just had a strategy seminar also in Digital Europe on how we basically work with the financial services and digital in the future. Moderated this panel will be done by Vincenzo Renda from the Digital Europe team, who is leading our efforts on how to work with digital and payments in the future. So with that, thank you so much, everybody, for tapping in. Let's make sure that we have a real policy discussion. We don't need to agree on everything, but that we have a discussion on how we balance this, transition of the future and how we get the most out of it in Europe to become even more competitive in the future. Let me switch to the next slide before we start the panel. So who is Digital Europe? Well, we have around 45,000 members. We work on everything from cybersecurity, data analysis, semiconductors, but also, of course, on digital in key sectors. And this one today is finance, but as you can see, we'll say we are in several other sectors also. We have 42 associations in the what we call EU plus area, of course, also meaning UK, Switzerland, Ukraine, Moldova, Norway, and other closely linked allies to Europe. We see our role as basically making sure that we regulate in a way that we stay competitive, that Europe gets a good head start, and that we make sure that we address consumers, but also companies' needs to really innovate and strive for being more competitive, more agile, and implement in a way that makes it safe, but also easy and understandable for all parties. Let's look at the next slide and what actually is the situation of digital payment. Well, first of all, as you see, we are basically actually on the 7th of November, we will launch our next manifesto for the next commission. And here are some of the headlines that we will be looking at. A resilient and innovative Europe. How do we become more safe through digital? How do we become more innovative through digital? A sustainable and healthy Europe. Well, what does it mean? It means, of course, that sustainability and health is at the core of any society, just as safety and resilience is. A global Europe, that we have a head start, that we don't fall over our own legs in the road to becoming competitive, but that we do regulations and safeguards in a way that we are able to innovate at the same time. And of course, a digital European society, well, that comes in very much here with a competitive Europe. When we have a digital euro that will basically facilitate much easier transactions, hopefully, but where we have a difficult transitions that we need to, safeguard from going too fast or too slow. Well, on digital payments, we can say that 240 trillion euros in 2021 was done by digital payments. So it's not really a small amount of money. This is really big transactions that are traveling every day. So all of a sudden moving that to a digital euro, what does it actually mean? Let's look at the questions that we will post on this topic today. Next slide, please. So first of all, what is the digital euro and what is the impact on citizens and the European society? So what must the proposed payment services regulation do to boost global competitiveness of SMEs? And how can private and public sector cooperate to combat new types of fraud? Let me dwell 2 seconds for the second one. If we look at transactions, of course, we need to have them as agile as possible in a way that we know that the majority of backbone of smaller companies, which is around 98% of the European economy, are able to use these digital euros. And it doesn't slow them down. It doesn't make them less competitive. So what kind of framework could actually do that? And how do we balance that? With that, let's look at the next slide. Let me hand over to the chair of the group, Gonzalo Cherico, the head of digital policy of Santander, with whom we also work very closely in actually balancing this very new policy on the digital euro. And after that, let me hand back to Vincenzo, who will facilitate this digital deep dive. Gonzalo, please, the word is yours.
Thank you, Cecilia. Hi, everybody. I will just present some of the highlights and lines that we worked it out in the digital finance working group, in particular regarding the digital euro and the payment service directive and regulation. As we see, this is somehow the umbrella of payments. If we can have the slide, please. The first slide, so that I can present the main points and the main lines regarding the digital euro. So the draft digital euro proposal provides an important first step towards developing the basis of a public-private partnership to deliver public money for a new digital age. To achieve success, the digital euro must first benefit to consumers is an important and necessary condition to digital euro being widely used and successful. So as today, customers already have access to competitive digital payment solutions, with new ones being developed frequently. The second point is that the digital euro should contribute to making payments in Europe more competitive. That's an important element. Is the remuneration model is a critical component as a significant investments will be needed. Remuneration should cover also all relevant costs incurred and not just the transaction fee. As a third point, we should also look at potential negative impacts on financial stability and banks' capacity to fund the real economy and therefore economic growth. And those should be avoided. One example is the holding limits, which should be set by, we think it should be set by the ECB and subject to evidence-based process when changing limits and be low in the first phase. And talking about phases, the first element that we think it's important is a two-phased approach to technically facilitate the initial rollout of the digital euro. In the first phase, we think that PSP should provide a single digital euro account per citizen to avoid system technical complexities that would halt the digital euro implementation. At the same time, the ECB, through the scheme rulebook, should, we think, actively lay the groundwork for operationalizing multiple account functionalities to be made available in phase 2. So this is the two-phase approach that we propose for the digital euro, and these are the four main calls that we think are really relevant. Regarding to payments and PSD, PSR, next slide, please. We think that, and is widely acknowledged, that electronic payments are essential to Europe's economy. Their importance and value will only increase. As the legislative framework government set payments, the PSR must deliver logical and common sense rules that make EU citizens' lives simple. Payment security can be achieved without undermining user friendliness. This is one of the important elements as well. The two are not mutually exclusive, so therefore the proposal should recognize that the SCA requirements introduced by PSD2 help to reduce value of fraudulent e-commerce transactions. We, as a group, we welcome the improvements around the SCA framework in PSR. Yet, specific SCA provisions still need a more flexible approach to strike the right balance between both security and convenience, as I mentioned before. Overly prescriptive SCA provisions will make it disproportionately difficult for customers to complete legitimate transactions. For example, we welcome the addition that two or more elements on which SCA authentication shall be based, knowledge, possession, inerrance, do not necessarily need to belong to different categories as long as their independence is preserved. But we ask that a concrete definition of independence is included in the regulation, and that two knowledge factor, like two passwords, should not be allowed as they are not sufficiently secure. This is one of the examples. Furthermore, we think we should place focus on raising consumer awareness and detecting criminals instead of making industry accountable for fraudsters' impersonation scams. This is the key element that is in the regulation, impersonation scams, which by Article 59 requiring PSPs to cover the costs of impersonation of PSP employee, we, I think, are ignoring the need to focus on preventing and detecting criminals carrying out the fraud. So there's an disincentive. Public-private collaboration to detect criminals is needed. Impersonation scam level and number of victims will not reduce if we do not target those carrying them out. This public-private collaboration is quite important and relevant. As well, shifting the liability entirely to the PSP, this encourages consumers from being diligent themselves. There's no incentive for the consumer. On this point, a crucial ingredient is to raise consumer awareness and put in place systems and campaigns that could help them better recognize and avoid report scams. We think the private sector already does a lot of these awareness, but much should be done. Finally, my last point, maintaining an alignment with the permission dashboards in the Financial Data Access Regulation, which is another regulation that was presented at the same time and is part of the digital finance package, to ensure proper data consent monitoring by the customer. So in here, data holders must be able to manage data permissions stemming from both FIDA regulation and PSR through a single payment dashboard in order to provide a user-friendly environment to customers. The establishment of two different frameworks and different rules for financial data sharing would hinder customer permission management and entail higher costs and operational difficulties for industry. As we know, the dashboards will require significant resources to be implemented. Seamless alignment between the two will also avoid confusion on the consumer side. And I think that's also something we should be very much aware and try to avoid as much as possible. This is from my side, this is the main points from the group. I'm looking forward to hear the discussion in more detail and in deep about the Digital Euro and FIDA, and wish good luck to the co-legislators. We are open and we hope we can collaborate even more and in perfectioning this legislative package that you from the Commission put it on the table recently. Thank you. Over to you, Vincenzo.
Thank you very much, Gonzalo. And indeed, good morning, everyone. I'm Vincenzo Renda, Associate Director at Digital Europe, and I'm very pleased to moderate this digital deep dive. I think our Director General Cecilia and working group chair Gonzalo really set the stage brilliantly. We have about 1 hour and 15 minutes for the discussion. And I think really the question that we will want to address is effectively how to design a successful payment markets in Europe. So as Cecilia mentioned before, you'll hear insights from banks, credit card networks, trade associations that represent numerous startups, and of course, the Commission. Now, I want this to be an interactive dialogue between the experts on stage. So I invite you as panelists to be concise and I think most importantly, candid. So feel free to react to what other speakers are saying and even challenge them if you must. Now, for the same purpose, I also invite all participants in the audience to post questions in the chat, and we'll do our best to bring them to our panelists. So I want to dive straight away on the digital euro, and just to add a bit of context to elevate this discussion. We know now that the digital euro is shifting gears. It's moving from a 2-year investigation phase to active preparation. And at the same time, lawmakers are diving into its legislative blueprint. So I want to start off with you, Fanny. You represent an important European financial institution, and let's really get to the heart of it. How can the digital euro impact traditional banking and financial institutions? Are we looking at economic boom through it, or more of a financial challenge? What is at stake here?
Thanks, and I don't know if it's the good way to start with us, but I think that we consider that we understand the main objective of the European Central Bank, in particular the one related to preserving the role of public money as the monetary anchor for payment system. We consider that the digital euro can bring more innovation into the payment system, and that it will be an additional payment option to choose from alongside cash. But having said that, it is true that we and the ECB as well are fully aware of the possible implication a poorly designed of digital euro could have for financial sector and financial stability. We recognize and appreciate the ECB intends to minimize this impact and ensure financial stability. For this reason, we believe that we have an ample space for the sector, the ECB, the European authorities to work together and for all sides to make constructive proposals without damaging the financial system. What are we talking about? The design of the digital euro could have serious consequences for the European banking system due to the fact that it is a risk-free asset that could displace bank deposits and directly impacting liquidity, profitability, and the relationship that banks have with customers. The real impact in financial system will depend on the final design characteristics of the digital euro. Therefore, in order to avoid an impact on financial stability, we consider that the ECB must define a holding limit that should be low or less to 1,000 euros. That will be sufficient to cover the monthly retail payments needs of the majority of European systems. In addition, and something that Gonzalo have stated before, establishing those limits and consider what would it be, it should be made an impact analysis, an impact assessment of the consequence for the European banking system, and start with low holding limits, just that, and concrete use case. We think that this is a big opportunity for Europe, but we have to start small to be successful. And then in the running of the digital euro, we can make changes and adjustment. In addition, and finally, we estimate that there is a risk that the digital euro does not compete on equal terms with other system means of payments. And if supervised intermediaries doesn't have the same incentives to do so. So especially the business model based on digital euro must be viable and sustainable for intermediaries, and it highlights the importance of a compensation model that covers the costs incurred by intermediaries to distribute the digital euro. That's all for my side.
Thank you very much, Fanny. And now let's hear from you, Kevin. You represent a national trade association, and I would like to ask you, on the whole, are SMEs and startups in Germany excited or apprehensive about the digital euro? Are there any pitfalls that the ECB must avoid when designing it?
Sure. Well, first of all, Vincenzo, let me say thank you for organizing this great round of people. I think it just comes at a perfect timing, given also the current discussions we are seeing at the European Parliament. I mean, I think Fanny already mentioned very important points for the financial industry, so I'm happy to complement them a bit, as you said, the SME and the industry perspective. So actually, just recently, I think 2 weeks ago, we published some new facts and figures around the digital euro. So we basically asked German SMEs whether they are in favor or not in favor of a digital euro. And interestingly, quite a high number. This also did strike me quite a lot. 82% are in favor of a digital euro, which is quite interesting, I think, because if I have a look at the discussions I had in the past, and this is also, I think, Gonzalo mentioned in his introduction, we really need to focus on actual use cases and benefits this digital euro is bringing. So I think we have to take this 82% with a grain of salt. What do I mean by that? If we think of a potential implementation timeline from 27, 28, probably later, we will see a huge uptake of tokenized deposits, for instance. We will see on-chain solutions that will be already in place for the industry. And what we can say, or what I take from these numbers, that industry is open to innovate, and that is the ECB's challenge now to bring a digital euro that can compete with private solutions in a somewhat timely manner. Totally understanding Fanny's points, though. So maybe that's from the non-financial industry perspective. So they are actually quite awaiting some innovation leaps in the near future. But maybe bringing it back to the actual digital euro, I'd like to add on a more a higher level some concerns we are maybe having. I think we still need to figure out and differentiate in the discussion, what do we mean by the digital euro? Do we mean the actual token? Do we mean the infrastructure? Do we mean the actual product? I think those get mixed up quite too often. We see this also in the Commission's proposal, for instance, when it's not quite clear whether an ECB app will be mandatory or not. I think the rationale behind this is to actually bring the digital euro in a timely manner. But, and then I will make a stop here to not make it too long for the introduction. We think it would be great if ECB and the regulator is rather focusing on setting up an infrastructure and ramp up phases that enables existing intermediaries, as we are a strong believer that the digital euro will have to tie into the ecosystem we are already having. And judging from the discussions I'm having with political stakeholders, but also with central bankers, I'm quite confident that's like the general goal of everybody. But I think we have to be a bit more precise in the ahead of us to get this more concrete. And then maybe I'll just say it, if we have some time later, of course, we also need to focus on what's happening on wholesale CBDCs to get a fully fledged picture. This was quite a lot, I think, for an introduction. Sorry for that, but happy to hear my co-panelists' thoughts on this.
Excellent. Thank you very much, Kevin. And now turning to you, Aoife. As a private payments network, now I'm very interested to hear from you on essentially how do you expect or hope that the digital euro will run?
Thank you, Vincenzo. And I think also what I will say will complement somewhat the previous remarks. But I guess the first thing, and the broad assumption here is that payments evolve, and it has been evolving, and it will continue to evolve. And this is just another part of that. And I think we should be very open-minded about what this project could achieve over the longer term. I think it is quite important to look at it from those perspectives that have just been mentioned, including the consumer piece and how that continues to evolve, and then because that does seem a little bit unclear at the moment at times. And I mean it's very central for something that is looking at legal tender and mandatory acceptance and everything else, that there is a very clear use case there for consumers. But I think just taking a slight step back, preserving the role of public money and addressing the decline of use of cash payments, which has been articulated by the ECB, is very important, but it's also very complex. And this is one where I think we need to be very involved in, and not only from a Visa perspective, but in the wider payment ecosystem and that public-private partnership piece, because it is something that there are existing payment networks such as ourselves that are already very broad in scope, and we also share a lot of the policy objectives, but also the protections and the benefits that a digital euro could bring. We have a lot of experience in this, and we have a lot of experience in things like resilience, cybersecurity, acceptance, dispute resolution. These are all characteristics of this type of scheme, so to speak, and it's something that we believe we can bring a lot to the table on that. I think it's a delicate ballet between within the payment landscape right now. It's moving very quickly. It's responding to consumer needs. It's trying to address merchant needs and wider economic needs. But this is something that's not contained to Europe. And I think when looking at setting up something with such an ambitious scope, we should look at the G7 principles on retail CBDCs as a good guide. We're focusing on competition, resilience, privacy, cybersecurity, so that we're also creating something with where Europe will stand within a global framework in a way that is somewhat comparable and also interoperable at some point, potentially in the future, but that may be too far along the route. But I think we should be thinking about that future piece already. There's three key foundations that we would see: a robust technology that meets and responds to consumer needs. And I think that articulation of the consumer piece is super important. It should be issued through a public-private collaboration as part of this kind of competitive ecosystem we just discussed. And there needs to be a wide acceptance by merchants. That is obviously something that's being presented, but I think how that works in practice and making sure that it is meeting the kind of standards and expectations that are being set within that digital ecosystem already, on part based on the PSD2 and now PSD3 and PSR. So there's many other moving parts at the same time where how this fits into an evolving landscape, but also an evolving payment offering and a UX, I think is very important. And I think above all, for retail CBDC, it needs to be open, transparent, competitive, which offers real choice. And that's for consumers, but also for the different use cases within the payments landscape, which many different providers are aiming to serve at the moment. I think the final piece, which is, this is an opportunity to do something together. And I think, and I say that within amongst my peers here within different parts of the industry and together with the ECB. But I think in all of that, again, is coming back to consumer priorities first, and ensure that we're really all aligned and understood around what the objective is towards consumers. And that piece is not only in terms of how consumer uses them, but the consumer protections, how it'll also evolve with things like EID, you know, and that making sure that we look at it in a quite horizontal way. We have a lot of evolving topics around SCA. I think it's making sure that how a consumer will potentially interact with the digital euro is somewhat consistent with how they currently pay in other contexts. And I think that's very, very important that we all work together in understanding and making sure that that's somewhat a consistent and good experience for consumers. I think we will leave it there.
Thank you, Aoife. And I think you mentioned a few very interesting points that I'll like to delve into later. And now turning to you, Florian, as representative of the Commission, you have heard a number of views so far, and I think you're the one with the blueprint here, right? So I'm interested to ask you essentially why do we need a digital euro? Will it be a leap forward? Very happy to get your views.
Good morning, everyone. The first thing I would like to say is that, I mean, we have, I agree with what my co-panelists said, generally that we have a competitive payment landscape. That's true. And we want, as Europe, that it remains competitive. So we need to look at innovation. And I think digital euro is well placed, you know, to look at innovation as well. So I think that the digital euro is needed for several reasons. I think that, I mean, we saw a decline in cash, which was accelerated by the pandemic, a huge rise of electronic payments, and to some extent, the only public money which is available to citizens, which is cash, is declining. The use is declining. So, I mean, in parallel of the digital euro proposal, but I mean, I want to stress this point. We have also proposed, you know, a legislative proposal in order to ensure the access to cash and to reinforce the legal tender of cash across Europe, because it's true that the digital euro will be a complement to cash and not replace it. But we need to think about the future of money, and the future of money is digital, and it's also true for public money. The second thing I want to stress is that many central banks around Europe, and that's why I would like just to take a step back here. Many central banks across the world are looking at a central bank digital currency. And I think that Europe cannot be behind the curve, you know, on this topic. I think it's very important that we work on it, and that's why we have a legislative proposal. That's why the ECB is also moving from a new phase of preparation phase of the digital euro. So I think it's very important because, I mean, we need to ensure that public money and the digital euro and the euro as the single currency is in use in Europe. And I think that we need also to be aware of some risk that we have from foreign CBDCs, from also, I mean, global stable coins. We don't have it one now, but I mean, it could happen, denominated in other currencies. So the digital euro is also important for a concept which is very important for the Commission, which is open strategic autonomy. So we need also to take that into account. We also need to recognize that in Europe, we have payment systems which are either national or international, but we don't have a pan-euro area payment system. So it's also important, you know, to have that in mind. The digital euro is also important for innovation because, I mean, we are going to have, I mean, new ways of paying, machine-to-machine payments, new innovation, conditional payments. So I think it's very important also to have, you know, the infrastructure and the public money which can support this kind of innovation. And I think it's also important for citizens because, I mean, there are some functionalities which do not work. I mean, I'm sorry, but payment system works in Europe, but sometimes when you travel, you cannot use your means of payments from one country to another. When you are traveling, you know, in a small island in Europe, or when you are also offline. So, I mean, the offline payment functions that we want as the first phase of the digital euro with online is very important because you can pay without internet connection. So that's, we really want to have, you know, this kind of, sorry, I'm in the dark, but you can still see me. So what I want to say is that we are not in a hurry with the digital euro, and that's one of my points. We have this proposal which is stable. I think that we need a big democratic debate around this digital euro because there are a lot of questions, and I like the questions which was raised by the other panelists. We are not in a hurry for a digital euro, but we need to be prepared, you know, because if there is in few years' time, a CBDC, foreign CBDC, which is used in Europe, or if we have a global stable coins denominated in other currency, the people will be asking why Europe didn't work on a digital euro. And so for us, it's very important to prepare this ground. We are not in a hurry, but it's good to have a table, a proposal which is stable in order to start these discussions with the co-legislators, with the stakeholders as well, because I think that it's very important to have this discussion. Maybe I can take advantage, Vincenzo, of the fact that I'm the last panelist to take the floor on this question to respond to one question as well, which is financial stability. Because, I mean, Fanny raised this point, which is a legitimate concern, but I think that first of all, I would like to reinforce that my commissioner is in charge of the digital finance, but the title of our portfolio is financial stability, and I think that for us it's a very core issue. What we want is that the digital euro remains a means of payments and not a store of value. For us, that's very important, you know. So what we have in our legislative proposal is that the ECB will have to develop tools in order to limit, you know, the store of value function of the digital euro, to avoid that, of course, bank deposits are displaced, which is a concern for the financing of the economy. And I mean, it's important not only for financial stability, but also a monetary policy concern. So I think that those holdings limit or whatever instruments can be developed by the ECB, because I mean, our proposal doesn't say just holding limit, but it can be other kind of tools, are very important because, of course, for us, financial stability is absolutely key. But those concerns, those risks can be mitigated and addressed in a way that allow us to develop a digital euro. So I stop here because I was already long for introductory remarks and happy to continue the discussion.
Thank you, Florian. I think you really raised important points here, and I'm just interested to see if any of the other speakers would like to react on the points just raised, in particular on the reasons for creating a digital euro. Fanny was mentioned financial stability before, or Aoife? Then yes.
Yes, just in terms of financial stability, I know that the Commission is also working on that at the ECB, and what has been said by Florian, that they are trying not to use it as a store of value, only as a means of payment. That's why we say that we have to start small and think how are the expensive in Europe with payments in order to allow it to be limited, and that's why we think that we have to start slow. We talk about a limit of 1,000 euros, but it can be less. What we consider is that you cannot start high, because if you start high, then it will be very difficult to then go low. So, and we cannot fail here in this project, you know, so we have to think about how we can make it successful. The way we can think it can be done is that start small, just that.
Thank you. I see also, Kevin, you have your mic off.
Yeah, if
Yes.
I can quickly respond to that, that would be cool. I totally understand the bank's perspective on especially like spending caps and the waterfall principle. I think this is quite advanced, and I think it perfectly takes to the point that Florian just mentioned. It's a means of payment, not a means of store of value. I'd love to quickly delve a bit deeper, or like bring it to the table again, which is innovation. And I think we all agree that in some way, shape, or form, we need to see substantial innovation, because otherwise, and this would pinpoint to a different direction, my fear is a little bit that once we have this digital euro, people are reluctant to use it because they already have in place other future means of payments. I mean, Aoife is well equipped to tell what's happening in her company. We already see touch points with stablecoin providers. We see bridges being built to decentralized finance. And I think we pay way too little attention on this innovative potential from the digital euro. So maybe if I moderate those rounds quite often, which is why I'm always used to actually posing questions. But if I could ask you, Florian, maybe to give us an idea of how discussions are going, because my gut feeling is we are rather focusing on getting the basics right, and like pushing ideas like you mentioned, machine-to-machine payments, rather to wholesale CBDC. So I would be interested in your view on how we do on innovation.
Yeah, and Florian, yeah, the floor is yours.
Thanks. No, Kevin, I think that it's true. I totally concur with, and also what Fanny said. I think that we need also to think about steps, I think that it's very important, just to have the basics right, and I think that the basic of all of this, I think that and it's normal that we have also the discussion about the technology, etc., because, it's something which is important, or innovation, but I think that to have the principles right, and to have this legislative proposal right, and to also have, citizens' ownership of this proposal, because I think that we need a very strong debate about this. I think that, I will never stress enough that the digital, euro is one of the symbol of the European unity, So I think that it's very important, that we get this. I think that for me, what is important in terms of innovation is that we can have, that the digital euro can that payment service providers can build innovation on the basis of the digital euro, And I think that, of course, maybe it's too early at this stage to talk about machine-to-machine payments and also conditional payments, etc. But I think that it's something that we need to envisage, in order to have a successful digital euro, and something which can in the future be able to support innovation from payment service providers. That's why I think that what Aoife said at the very beginning about public-private partnerships and the role of private service providers is important, because we do think that it can be also a way, this digital euro, to allow more innovation, and that's important. One innovation that we want, and that is in our legislative proposal, is offline payments, and I think that it's something which is really important. It's important for financial inclusion as well, because I think that, to be able to pay even you don't have a good internet connection, or, in remote areas, I think that it's very important. So I think that I fully agree that it should be a step-by-step approach. Now, I think that having said that, I think that we should be aware also of the two tracks, of this work. There is one track, which is the legislative proposal, having the principles right, dealing with very important issues, financial stability, data privacy, anti-money laundering, relations with third countries, these kind of things which are in the legislative proposal. And the other track, which is done by the ECB and which is this preparation phase, where we are going to dive into the different technical elements. And I think that, of course, there should be a discussion between the two tracks, but there are, I mean, it's different tracks still.
Yes, thank you, Florian. I think this point is very timely because we got a question from the audience on exactly that. What would you imagine as, let's say, the three main building blocks for the preparation phase on the technical element? But I'll get back to you on that in a moment. I see that Aoife has her mic turned off, and maybe if I don't know if you wanted to react on the reasons for the digital euro that were mentioned before by Florian.
I just wanted to pick up on a small point is when we talk also about the public-private partnership, I think being super important, but we're also in bringing that to public-private money. I think it's, a consumer currently can't really distinguish between public and private money. And one aspect of this would be to create more kind of clarity in that sense. But I think it's in all of our interests that we ensure that trust remains within private money, and that is very important, that there's not a hierarchy here within that, but it's just that we bring this from a theoretical point to a consumer point, that trust is inherent and super important within all types of payment networks and all types of contexts, and and also for different demographics, and I think that's something that we should be careful about the framing of, so that we're not inadvertently diminishing the trust that currently exists within private money.
Thank you for your point. And then back to you, Florian, on the preparation phase. What would you expect as really the main focus areas there?
Honestly, I mean, we are the European Commission. Our main focus at the moment is the legislative proposal. I think that, the preparation phase, it's something which is important, which is run in parallel. But I think what is important for us is to get the elements of the legislative proposal and all the topics that I mentioned: financial stability, financial inclusion, AML, data privacy, all those elements which are in the legislative proposal, right? Then the ECB, we need also to remind, here, we have a legislative framework which will enable the ECB to issue or not a digital euro, but many elements will be determined by the central bank itself. So I think that we should be very clear. I will not comment on things which are developed at the moment by the ECB in the context of the preparation phase. If I can make a remark on what Aoife said, I think that she's totally right to say that we should not undermine, the confidence or the trust in private money. And I think that we have never done so. I think that we have never undermined the confidence of private money. I think we have great PSPs, great banks, which are stable, etc. So, that's clear for us. The thing is also, we should also be aware of, the role of public money, which is also important, in the context of a decline in the use of cash, we need also to have this monetary anchor, which is the public money, and which is also the base for private money, alive and striving. So I think that it's, I think that, of course, no undermining of private money, but we should be also aware of this role of public money in payments.
Thank you, Florian. And I think great points all around, really. And of course, here the question is how the digital euro would fit into the existing payments landscape. So I want to expand a little bit this dialogue. As you know, we are the EU payments market is currently governed by the PSD2, which is currently revised. So we have PSR, the Payment Services Regulation, on the table. And I'm just interested now, turning to you, Kevin. I would like to focus a little bit more on this PSR and really ask you, what's the golden ticket that the PSR proposal now needs to deliver to really improve the regulatory environment for German or let's say SMEs and startups in Germany? What would be your top pick?
Thanks, Vincenzo. And I think competition is a great bridge that builds the bridge to PSR and PSD3 or the Financial Data Act. Before I go into some nitty-gritty details, I think it's important to mention we see both acts are quite differently. With the digital euro, we have something very new, so which is why we have to figure out some core principles from scratch, which can be tricky to some point. Given PSD3, PSR, we can happily say that after all, I think PSD2 did already take some right steps toward increasing competition, toward making payments better within Europe. And I think what we see with PSR in general is like a continued development of some core principles we set a couple of years ago. This makes it quite differently. I know that some of my colleagues are going to talk about dashboards and how the Financial Data Act is gonna correspond with some points we see at PSR. But if I can pick one area, and I think this is also very important toward actually making use of new payment methods, all evolves around strong customer authentication. We see this being a big roadblock in the past for actually bringing innovation from new players to existing player via payment accounts. And I think if we actually manage to embrace innovation, let me just give you one example, like which is currently discussed, using biometrics in terms of authentication. I think Aoife mentioned also IDs in a different context, but if we manage like authentication processes, onboarding processes more easily, I think there's a lot to gain here. And staying with SCA, one very tricky issue, take KYC processes. If we read it right, and I think this is a huge roadblock, that financial institutions in the future need to have contractual agreements with every provider of whatsoever or of mobile phones where you actually do SCA. So take the fingerprint, for instance. And they don't only need contracts with every provider, but actually with every model to do SCA. And there we see this is something where security beats convenience to an extent that isn't right. And for instance, we are currently working on finding a model where we can work with certificates so that not every single institution has to have contractual agreements with every different model of mobile phone business owners. So this is just one example. You see the level we are discussing is more deeper, way more detailed. But I think it's a great time that we revise it, and I would just put that one to the table and would be interested in my co-panelists' views.
Thank you, Kevin. It was a very concrete example, so thank you for that. And now turning to you, Florian, maybe just looking at a high level here, what were the EC guiding principles in reviewing the PSD2 and introducing the PSR? And maybe I'm going to ask you, is there an area where you really would like to see a substantial improvement compared to the PSD2?
I think that, one of our guiding principles for this legislative proposal is that it's evolution and not a revolution. And I think that it's very important, to keep that in mind. I really agree with what Kevin said, that basically PSD2 worked quite well, but some improvements were needed. And if I must say that the other guiding principle beyond the motto evolution, not a revolution, I would say that there are three, guiding principles. The first one is consumers. I think that there is a strong, willingness on our side, to improve the situation, notably on fraud, so we have a lot of measures, to combat fraud. So the IBAN name checks, the data sharing among PSPs on fraud. There are also this obligation to educate citizens around the issue of fraud. There are also, new rights to be refunded. So for PSPs, which were mentioned by Gonzalo in his introduction, we have also a new set of rights, and information to be provided to consumers, blockage of funds, the readability of payment account statements, or about information on the credit transfer outside the EU. So strong, focus on consumers. The second guiding principle was competition. And I think that it's very important because we want to also ensure a level playing field between banks and non-bank PSPs. And for us, it was also a guiding principle because it's also important for competition, for level playing field. So we have, those rules around the right to obtain a bank account, which is important to safeguard clients' money for PSPs. We have also this access of PSPs to payment systems, which is also very important to ensure a level playing field. And I think the last thing that we wanted to, the last guiding principle would be digital. And here it's about open banking that we want. We knew that the open banking framework needed to have some improvements. And here, clearly, what we are doing here is that we are bringing those improvements in our legislative proposal. And of course, for the wider data sharing, we have the FIDA proposal, but here we wanted also to improve the open banking framework and some measures on APIs, etc., which were taken in our legislative proposal. So if I summarize, the guiding principles are consumers, competition, and digital.
Thank you, Florian. And you raised this point of fraud in the PSR. And so I would like now to get your views, Fanny, on that. Obviously, the PSR introduces this Article 59 language around the new type of fraud, impersonation scams. And so, you're a bank with experience dealing with fraudsters. And so I'm very keen to hear your thoughts on Article 59.
Yes, the new regulation in terms of the disposition of fraud is something that worries us. The PSP bears the responsibility of providing that the consumer acts fraudulently or with gross negligence. Why we think that this is not a great provision or that we strongly oppose to it? It is because it will facilitate an increase in fraud since customer will be less cautious and protect their and be less vigilant on the payments that they will do. It will create new venues for fraud, and PSP has limited means to prevent this type of fraud. We need to rely in some aspects in network operators and internet platform to implement technical safeguards. We consider that the regulations should establish mitigation situations in which PSP should not be obliged to make such repayment because the client probably doesn't receive the information through channels that the company used to take in place and use. So we are making a lot of efforts to educate and raise consumers' awareness about this type of fraud, but it is not only on our side. This has to be something also that institutions, member states have to work with us in terms of financial education. and we cannot change the rules of fraud only for payments methods. We have to think that if we change the rule here in payments, also we have to change in other regulation. But at the end, what we are doing is allowing customer not to be preventing frauds and be and asking them not to be diligent about when they are paying in this sense.
Thank you, Fanny. Clear point. Florian, maybe you want to react on Article 59 and the issue of impersonation scams.
Yeah, I mean, I'm just thinking that first of all, I mean, this right to refund is not, universal. I mean, it's not in our proposal. What we have done is an improvement on one very, important type of fraud, which is spoofing. So it's on that. I think that, the refund right will be under quite strict conditions because, gross negligence, as mentioned by Fanny. I think there was also this also important thing that the customer has to report on this fraud, so I think that it's very important without any delay. And also the fact that the spoofing has to be convincing, the email address used should be the same as the one of the PSP or the telephone number. So I think that there are some conditions which are attached to that. I think that in any case, I totally agree with Fanny on the fact that we need also educate citizens around, the frauds. And I think that it's true that there are many scams around, related to payments. And I think this is something also that we are taking into account in our legislative proposal. I think it's very important. More generally, I would just say as well that the Commission and this Commission is doing more on financial literacy than ever before. And we do think that it's also part of the discussion that we need also to educate citizens on financial matters in general, but also on this kind of very important things like scams, So I just would like to say that our proposal, in our view, is balanced, and but it was also important to put the stress on this spoofing, impersonation, fraud, which are quite important today.
Thank you. Fanny, over to you for your
Yes,
reaction.
thanks you, Florian. Just to say that gross negligence is difficult to demonstrate. So that's why we consider that in the proposal, they should be, I don't know, maybe some mitigation factors in detail. So how can you prove that the client have been negligent? And in that case, you reject the repayment. That what we consider should be clearly stated in the regulation, because if not, it will be very difficult not to repay.
Thank you, Fanny. And I think this is also a message for the co-legislators as they look at the file. Aoife, just turning to you now, I'm interested to hear about your views on SCA and the changes brought by the PSR. Are they going in the right direction?
Yeah, I think picking up on what Florian said at the beginning on the evolution rather than the revolution piece, like so much work and huge amount of effort by industry and together with EBA and on the RTS for PSD2 have they've pushed CSA in a very radical direction, which has been mostly brilliant in terms of consumer protection, fraud prevention, also driving more and more clarity to industry broadly about how this works and how it should evolve. I think we still need to be careful on that balance between over prescription and allowing for technology to evolve, and payments is constantly evolving. That's the one thing that's constant is change, and I think it's just making sure there's facility there. And I think within that, we would support an open framework for authentication in general. Open does not mean that it's not secure, but it's allowing technology to evolve in a direction, especially with fraud, whereby we're continually able to meet quite sophisticated methods of fraud that are occurring, and actually make sure the consumer's protected, the merchant's protected, but the overall security of the network remains. I think being very, being very honest about, like, we're very happy about allowing 2 factors from the same category. That's a very welcome addition. But I think on behavioral biometrics, and Kevin raised this as well, I mean, it's maybe a little bit more clarification is required in some of the current text, but also looking ahead to EBA, is that, non-physical biometrics can be extremely accurate in this. And this is, an iris or fingerprint can be, how that's used is like evolving very quickly, but also allowing for the fact that when these come into force, we still have, 5-7 years ahead of, taking into account new technological innovation. And we can see already that this is an area that's evolving. Overall, I mean, it's, again, coming back to this point on trusted third parties and trust within the system, is that we should be allowing and ensuring that as authentication solutions are developed, that they are creating, the ability for payment service providers like ourselves, or the banks or PSPs, and within the whole ecosystem, to ensure that first of all, the consumer convenience piece is not ever forgotten in this, but allow the underlying technology to be updated accordingly. And I think that's, so as it's where we started with, is we have a good base. We do need to continue to evolve this and provide clarity and consistency to all players, but still allow some space in order for this, because what we have now, to remain relevant and applicable in the next 5 to 7 years. I think that's very important. I think the other piece is also slightly picking up on what Kevin said, is that we need to be careful just about the proportionality in certain areas. And I mean, we've a much wider discussion on SCA and the delegation piece, but the critical outsourcing and the outsourcing requirements that are required in some players there, they're quite, I mean, they exist for a reason in certain contexts, but they're quite hard to meet for, in terms of just the commitment that's required when you enter into critical outsourcing agreements. And I think that's something that we should be mindful of, is that we want a SCA delegation in a very trusted way to continue to proliferate, but it should be the requirements that are attached to it, especially if governed by critical outsourcing agreements, they need to be proportionate. And that is something as well in terms of level playing field that we feel is quite important too. But I think I'll leave it there.
Thank you, Aoife. And I think you mentioned the biometric authentication issue as well. Maybe Florian, I'd be interested in your quick take on these points of SCA delegation, biometric authentication, and maybe what was the reason for including the specific language in the PSR?
Okay, I mean, I'm not going to comment line by line the proposal. What I just want to say is that what we wanted to do is that, I mean, first of all, I just like to say SCA is a great success in terms of, I mean, EBA findings is that the level of fraud is lower by 70 to 80% thanks to SCA. So we needed to bring some improvements that are in the text to the SCA, of course, because I think that we heard also some concerns from PSPs. But basically, I think that the system needed some improvements, but I think generally it was working. Of course, we are always taking into account, innovation, and we don't want to impair innovation when we are tabling a proposal. But basically, I think that now, I mean, our improvements on the table, of course, there are always, I mean, a need to have a fine tuning, of the text of the proposal. And now, I mean, it's in the hands of the co-legislators. And I think that every input from the industry is welcome, to see how we can improve the text. I think that we are also open-minded on improvements that can be brought.
Thank you, Florian. And so far, we've mentioned FIDA also a little bit in the background of this discussion. And I'm curious to get your views, Fanny, on why basically it's so important to make sure that there's alignment between PSR and FIDA.
Yes, it is important because you cannot have two regulations regulating the same thing. For instance, we are talking about sharing data in in PSR. We are talking about payments accounts, and in open finance, we are talking about everything. So if you don't have an alignment there, then we are going to have problems in terms of interpretation, compliance, and regulation. And in addition to that, we are going to have two permission dashboards based on different regulation. We have to have it all together because the entities will not provide two different dashboards. It's going to be one dashboard for the clients in terms of the information that they will share with third parties in terms of payment or other financial information. This is only to have it clear that we need the same framework and the same rules. We know that probably in this step of the regulations that there are different regulations, it cannot be possible, but we have to think forward and in the future, and we have to align those regulations into one or include the data sharing of PSP into the FIDA regulation.
Thank you, Fanny. Kevin.
Actually, Fanny just made my point, because what I heard in informal discussions is that one idea that I heard of is like that basically taking everything we still have currently within PSR on access to accounts and data sharing, and eventually put it or push it toward the Financial Data Act once it is in place, but there is some sort of a reluctance. This is how I perceived it, like to totally eradicate an existing principle before a new one is set up. But I think this is also what I guess the audience is very interested in, on some sort of a timeline or way down the road on how we are going to align those two, because at the end of the day, they're dealing with the same issue in core.
Thank you. Aoife, do you have anything to add on? Florian, you are don't need your microphone.
Yeah, I think that just, I mean, on the permission dashboard already, I mean, there is an alignment in our proposal, so between the two. So I think that it's something, I think that it's also important, you know, that it's something which is preserved in the context of the negotiation. So it's important for us to have tabled those two proposals at the same time in order that they evolve, you know, in parallel. So I think it's important. And then, I mean, between open banking and open finance, of course, there are some, I mean, differences, you know, in our legislative proposal, because we had also to take stock of the fact that open banking is already up and running. And of course, there are some differences, but of course, in the future, and I think that our proposal on open banking is quite clear about that, at some point, there could be even more convergence. But I mean, of course, it takes time, and there were some principles which are very different, you know, in the open banking and in open finance, notably the compensation model, which is quite different between the two. And of course, we need also to our will for the open banking and PSD2 was not to disrupt, you know, existing TPPs, which were relying on this no-cost approach, and for us it was important. So we are aware of, you know, the difficulties of the fact that the approach are different. But what I want to say is that if we can bring already convergence, we are happy to do so. And it's what we have done in the proposal with the permission dashboard.
Thank you for your point, Florian. I want now to bring up questions from the audience, and we have one around the decline of cash, which was mentioned before in this discussion. And essentially here the question is, what are the problems that are being observed in markets like the Nordics, where cash use is the lowest? Maybe to you, Florian, you mentioned that this was one of the reasons that were driving the adoption of the digital euro.
I mean, what is important is that we need to preserve, the role of cash in society, because I think that one important point for us and for the Commission is that the cash is fundamental for financial inclusion. I think that people who are financially excluded rely more on cash than any other groups. So for us, it was really, really important to have this proposal at the same time as the proposal on the digital euro, and also because our thinking is that the digital euro will complement cash but will not replace it. So what is important in all this discussion about payments is that people need to have options to pay, because it's the only way to have a competitive payment landscape, is that we need options. So that's the thing. The second thing that you are mentioning is that the situation across Europe in terms of use of cash is very different from one country to another. So I think that in some countries, people are very reliant on cash, and in some people, if you take, for instance, so it's not in the euro area, so they are not concerned, I would say, by the legal tender of cash. But if you look at Sweden, for instance, it's true that the use of cash is less important. But still, I think that we need to preserve this role of cash. So we have different things in our proposal. The first one is about the legal tender. So just to reaffirm that, the acceptance of cash is in the regulation. And the second thing is also to ensure that there is access to cash. And so there is a monitoring that should be done by member states in order to monitor that still the possibility to use cash is available for citizens. So for us, it's a very, very important legislative proposal.
Thank you. Any other panelists wants to comment on these points? Then there is another question, which I'm happy to ask, and that's all about the interplay between the digital euro with its legal tender status and business model, and emerging initiatives like the EPI. Who wants to comment on that? I'll direct it to you first, Florian, if you don't mind.
Okay. On that one, I think that what we want, and I think it's also embedded in our legislative proposal on digital euro, is that also the digital euro infrastructure builds on existing, standards of private payment. So I think it's also something which is important for me. I don't see, the interplay is that everything which is in the private sector and the digital euro payment infrastructure will be complementary to each other, because we don't want to reinvent the wheel, for the digital euro infrastructure, payment infrastructure. We want that it builds on existing standards of the private sector. For us, it's very important. It's very important for several reasons. First, because it avoids costs, and I think that we should be mindful of that. I think Fanny mentioned the cost, which is also, of course, an important topic when we are talking about a pan-euro area payment system. I think it's very important. And the second thing is also to have ownership, because I think ownership by the payment service providers, that they are willing to distribute the digital euro. So it's also important that we reuse, the standard. So I will not comment on API in particular, but it's the philosophy of our text that there is, this I would say synergies between what exists already today in the market and what will be the digital euro payment infrastructure. It's in our legislation, and it's an important point for us.
Thank you. Kevin, floor is yours.
Yeah, I think maybe my experience is similar. If we have discussions about it, we often talk about the digital euro and the EPI like in as in one idea, and I get it. I think because from a political perspective, like achieving European standalone payment infrastructure in some way, shape, or form, it makes sense to think them together. But, and I'm happy that Florian just stressed it, I think what is important to basically be agnostic toward whatsoever solution. EPI slash Vero is having their case that is working, I think, with and without the digital euro, as is the digital euro working with basically every other player. And I think interoperability toward all directions is key here, and everything else I think will be a decision by the market. But I think we should be careful, and I talk to all of us, like, to reduce the discussion when we talk to European payments to EPI and the digital euro. So I'm glad for clarifying that.
Thank you for that. And I don't see any other question. So I really think it's time to wrap up this discussion. We spoke about the challenges in designing the digital euro, in the issue of combating fraud in payments, key drivers for the PSR, and the importance of SCA. And I think it was really a sophisticated discussion which highlights the key moment in which digitalization and financial services are in Europe. So I would really like to extend a sincere thank you to our panelists for their insights, and also for our engaged audience for participating in this vital conversation. So let's continue to, I would say, shape the future instead of being shaped by it. Thank you very much, everybody, and goodbye.